All right, good morning. How are you? We got one more central bank to go through. We had the Fed, we had Norway, we had BOE, now we got the ECB. Are you guys excited? What a day. What a day. What a day. Yeah, cool. Not much of a delay today on YouTube, so nice, good stream quality. Very cool. Trying to get into the tab. There we go. Very neat. All right. Well, hey, welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. How you doing? I'm missing a page. Hang on. I don't have a page open. Well, how come one of my pages ain't open? Hang on. I guess I got to go do something. Hang on. I'm almost there. So we got a pivot. That was nice. There we go. I think I got everything. Very good. Let me just shut my door. For some reason, my door's open. Hey, yo, you know this kid? I said I didn't, but I know he did. Get ready, because this ain't funny. My name's WMD, and we're about to make money. Pulled out the euro and aimed it at the sky. Hey, anyways, welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hi, my name is Wayne. Nice to see you. Welcome to the stream. So today we are going to burn through the markets quickly and just do a wrap up of what happened yesterday. In about 9 minutes, we'll actually get an ECB decision. I believe it is at 8:15. And then we got to wait 30 minutes because, they're European. So after the announcement, they have to go outside and have a cigarette. And then at 8:45, we'll listen to the press conference. Yeah, so it's going to be another slow and lazy day, but that's good. Yesterday was brutally awesome. If you go to the description below the live stream video, there are links to many resources, some of which you might find valuable and useful and helpful. There's a free 90-minute lecture on fundamental analysis. There's a free 90-minute lecture on investing into stocks. Cool. Hey, do you want some personal feedback on your technical trade plans? Pop in a trade plan at tradeplans.ai and you'll instantly get feedback. It's like hiring me as a coach, except I'm $500 an hour. This is free. Yeah. I run an education program and group, Investor Boot Camp. It's $88 a year. I mean, seriously, it's so ridiculously cheap. Cool. And not even joking, it used to be $1,688. $1,680, I think. $1,382. Okay, yes. It used to be $1,382. Now it's $88. I mean, what more can I do, right? And then lastly, but most importantly, we all need a broker. Most brokers make money by trading against you. They want you to be stupid. They want you to trade poorly. Because they don't enter your trades into the interbanking system. They keep your trades, and they want you to lose your money. That way they just keep it. Cool. Trader's Way is not like that at all. Trader's Way is an ECN, and they care about your education because they need you to succeed, because they're an ECN. And what does an ECN mean? They actually enter your trades into the interbanking system through straight-through processing. So they hope, they want, they need you to succeed. So what kind of service provider do you want? One that makes money when you lose, or one that makes money when you win? Trader's Way wants you to win. Trader's Way needs you to win, so that you trade for years and years and years and years and years, and they just simply provide a service to you. All right, so like I said, we got a few minutes to tell the ECB announcement. And we could take a look here quickly at the indices. Let me check for congruency here. We had this set up for an earlier appointment. Well, I guess I could just go window tile. So let's see, hour, 5 minute. All right, hour. 5 minute, we got to make that hour. Hour. Okay, so pound recovering here, post its meeting. Aussie back at the mean and stabilized. Euro weak. Huh, even against the dollar, huh? Amazing. All right. Kiwi caught in between, tried to go up and right back to kind of where it was. CAD all over the place still. Swissy giving back, which is actually quite good because we want risk on. Dollar very, very, very weak, as it should be based on the pivot and the update to the summary of economic projections, which I went through yesterday. And yen is brutally strong this morning against all these risk-on currents. Nasty. So today we're going to watch the euro because of the ECB meeting in a few minutes. Will they raise interest rates? Will they cut interest rates? What will they do? What do they think about the future? Germany's in trouble. Will they save Germany? Hey, yeah. Well, we'll find out. Okay. Stuck in a range here on euro pound. Okay. Euro Swissy has some up. Notice that we're through all the moving averages. We're through this floor that I drew for you guys. So we'll see how it will respond to the news. Euro dollar. It's got some up based on the pivot points. This can go as high as 112 or 113. That's so good. Alrighty. So what do you think? 110 today, 111 tomorrow, 112 by next week. Oh, our CIA meeting was great. It was about 10 hours long, and we did a very deep dive in a lot of different strategies. Because it was the first meeting, I think it was even overwhelming at times. But Like, I am just so happy and so excited and so proud and all these different things of what our group is doing. I mean, it's really incredible. Yeah, thank you, JGB. There's just a lot more to go, right? It's a big start, right? It's a big start. And there's lots more to discuss and learn and share and all that kind of stuff. But holy smokes, what an amazing one day. And there's probably still questions. But nonetheless, very good, very good, very good, very good, very good. Well, the Nifty 50 goes back to like 1965. So anyways, we got an ECB coming out in 90 seconds. Sure, JGB. Or we could just do a quick call or something, if you don't mind the cigar smoke. So it looks like a hold, huh? Yeah. All right, we got a hold. Great. A whole lot of nothing. Great. So now we got to wait until the press conference. So we got a half an hour here. Europa. Ba-ba-ba-da-da. Europa. I just lost the chat. Where did the chat go? It must be over here. Yeah. Well, I have a meeting at 10:30. So I might be able to do it right after this live stream. We could do a meetup. Devin says, what kind of graph is he using? I'm using moving averages, pivot points primarily, and then this red and green indicator is a custom indicator, proprietary indicator, and it's doing pivot points based on price action. All right, all right, all right. Let's go to the home page. Press conference today. Very nice. Press release. The Governing Council today. I'll read it like in British for some reason. Decided to keep the three key interest rates unchanged. While inflation has dropped in recent months, it's likely to pick up again. Yeah, there was some inflation in Germany, I think. Underlying inflation has eased further, but domestic price pressures remain elevated. Past interest rate increases continue to be transmitted forcefully. That's so Lagarde, huh? That's such a Lagarde thing. Transmitted forcefully to the economy. Okay, tighter financing conditions are dampening demand, and this is helping push down inflation. Yeah. Don't thank the American oil industry for producing more oil than the entire history of the world. No, it's their policy. It has very little to do with our policy. But anyways, Governing Council is determined to ensure inflation returns to 2%. Yeah, good luck with that. The Governing Council will continue to follow a data-dependent approach. Thank you for telling us nothing. The ECB interest rates are the primary tool for setting monetary policy stance. Yeah, whatever. The interest rate and main financing operations, same. Asset purchase program, fine. Refinancing operations, blah. So, said nothing. It's absolutely nothing. Sakala, I urge you to join Investor Bootcamp because you've just stumbled across something. You're asking a very good question. The answer is yes. In fact, you just stumbled across the most important thing in the entire Forex universe. It's the only thing that matters. So if you're like, oh, hey, does this matter? It's the only thing that matters. The reason we track all this endless amounts of data, CPI, PPI, PCE, NFP, GDP, ADP, all this stuff. The only reason we track any of that, and we have retail sales coming out in 10 minutes. Why do we care? Because it all filters back to deciding what will the central bank do with its monetary policy. So honestly, look, it's only $88. So I'm not saying it so I can make the $88. It'll be the most important step you will make as a trader and investor. You just discovered the secret of the universe. And I'm not even underplaying that. Or overplaying that. That is, so yes. Now that you know, you need to know everything. You're missing everything. You're missing the entire concept of Forex trading. So honestly, please join Investor Bootcamp so that you can learn all these things. It's like 100 hours of training. You really need to know this stuff. And these are not like just videos of me babbling like I do in these live streams. They're lectures. And if it doesn't teach you everything, at least you'll be educated enough to go find the thing you think you need to know more about. Yeah. So anyways. The rest is up to you, my friend. So anyways, we just read the monetary policy decision. I didn't see anything interesting there at all. So we'll have to see what she says, but I feel like she's not going to say much either. But there might be some questions about the Fed, which is pretty funny. Okay. So inflation in the United States is low. Falling. It's not as low as it should be. But what we've been talking about the last 3 or 4 weeks is that we have interest rates at 5.5 and inflation is falling. And, and expected to be at the 3.0 level soon, which means now we're at 250 basis points spread. Okay. Amazing. What we were talking about in the past, okay, is that inflation, or let's say core inflation, is more like 3.5. Fed funds rate 5.5. 200 basis points spread, and that's too high. The Fed wants restrictive, but that's too high. What is normal? Well, let's say normal is between 100 basis points, actually probably even 50 basis points, to like 100 basis points. So one could argue, okay, that the Fed funds rate could drop to 4.5 and still achieve the goal of keeping the economy from getting too hot and reducing inflation slowly over long periods of time. Oh, right on, Sakala. Awesome. So we're like the spread here is too high, and it could drop from 4.5 to 3.5. Okay? All right. Now this is, interest rates are slow and steady. They don't change very quick, typically. And inflation is dynamic. It's volatile. So that's why you maintain some area of spread. Right? And Richard says that's real rates, right? I mean, there's all different. I mean, it can be, it doesn't have to be. But yes. So you would say if the Fed funds rate is at 4.5 instead of 5.5 and inflation remains around 3.5, then we're at 1.0 on the real. Yeah. But let's go back and do a history lesson. And I did this in our swing trading group, I think, the other day. I asked a question. I said, in the past, the Fed has cut, okay, interest rates when there's a recession, but they've also in the past have cut when there wasn't a recession. They're trying to avoid a recession. So they preemptively struck by cutting interest rates before the recession. And having a 200 basis points or more spread means their policy is so restrictive, they might actually create the recession. So now we're at a point where the Fed is acknowledging, look, inflation was 10, now it's 3 something. And many of the pressures that created that inflation, like the supply chain problem, have been fixed. And that spread's too high. So now they want to cut next year to avoid the recession. Great. So let me ask you this then. In the few periods, and by the way, this is a very unique period. It doesn't happen very often that we're in a situation like this where the Fed will cut with full employment. Why would you cut with full employment? Well, it's just simply the Fed funds rate is too high. If they don't lower it, they will create a recession, and they're realizing they've achieved many of their goals and they don't need to cause the recession. So they cut. So going back to the question, in the period of history in which the Fed cut and there was no recession already, how much have those cuts been? What are the biggest Fed cuts? How many? 25 basis points, 50 basis points, 75 basis points, 100 basis points, 125, 150. What's the most the Fed has ever? What's the most the Fed has ever cut during a period of non-recession? Type in a question mark if you don't know or not sure, but let me know. Johnny's put in an answer. How about everybody else? When you got broken fingers? Thank you. Good, thank you. Now, Johnny, why did you say 75? Jim said 75 as well. Why did you guys say 75? Richard said 100. Because you said so on Monday. Right. And that's the right answer. They've never, ever have cut by 100 basis points without a recession already, right? Like, instead of preventing a recession, they're saving us from a recession going crazily bad. So I said this the other day, the most that you could possibly logically price in are 3 rate cuts. Said this on Monday. Can anybody confirm this? That recently, whether it was Monday or Tuesday or Sunday, doesn't matter what day, but it was before yesterday. Okay? Cool. Guess what the Fed told us yesterday? That's what the Fed said in their summary of economic projections. Oh. Ow. But Richard, before the SEP came out, I already explained using a historic analogous, right? It's analogous to the past, what we're in now. And when you look to the past to now, they've never gone more than 3. They've never done more than 3. And 3 seems probably reasonable enough anyways. So, you're educated on this stuff. Central bank history. Oh, cool. Right on. Good to know, right? Let me get the... we got import-export data. We have the retail sales came out. Let me get some numbers for you. Let me get some numbers. So continuing claims, 188 still. Retail sales, control group, 0.4. Month over month, 0.3. X-Autos 0.2, so apparently people are buying some cars. It's interesting. We haven't had awesome retail sales for a bit, but that's a pretty big number. Apparently Americans are still spending. I wonder if they're using their credit cards to do it now. Oh, wow, this is well run. I like this idea that they've put like almost not a mission statement, but a vision statement. I kind of like that. That's good management. Most Americans speak only English at home or speak English very well. But some don't speak English good. So anyways, this is where some of our data comes from. And of course, Okay. Released today. Today is going to be the day. I'm going to go back to you. Monthly retail sales is up, like I said, up. October was a negative number, so now we have a positive number. A big differential is what I'm getting to. By now, you should have somehow realized what you got to do. All right. So anyways, yeah. This was a little bit lower. Then this was a little higher. Big change. Oh, yeah. Not buying cars. Wait, that doesn't make sense. Wait, then what is that? Oh, I see, month over month. Okay. Yeah, so there were a lot of cars sold, and that's what I said when I was just looking at the numbers. October, people didn't buy cars. What, are they on sale now? Has anybody bought a car recently, like in the last couple of weeks? Years, Sakala, years. Are you really? Are you getting the Porsche Panamera e-hybrid? It's a nice car. Remember, I think Robin Williams was the actor. Oh, that's not bad. That's not bad. There's a funny movie, I think Robin Williams is in it, and it's made like it's a movie of the 1980s and how ugly life. Well, you'll see how ugly many parts of the world, part of the American culture was at the time. And anyways, he goes to work. Like on a Saturday, he's required to go to work, something like that. I don't know. So he drives to the office. No, I guess it was a regular work day. He drives to the office, and there's a parking lot full of exactly the same car. Like, they all drive the same Chrysler. He walks into the building, and he's fired by his boss's parrot, because his boss never goes to work. So he's trained the parrot to fire people, lay people off. Anyways. All right, let's do some little ECB action. I'm going to get slapped by YouTube. Well, screw you, YouTube. No, don't screw you, YouTube. But let me do this. I need to add window capture, I think it is. Maybe video capture. News source. ECB. Yeah, Volvo's not bad, Johnny. Oh, no, that ain't gonna work. Okay, close. Add, yeah, it was window capture. Add source, capture, window. Okay, just waiting for ECB. Now, I think I could do something better than that, though. I want to, hang on. All right. Well, you know what? Let's listen to that horrible music. Image browser source. I think we can do that. Add browser source. All right. Oh, look at the stupid ad. Am I even allowed to update that somehow? All right, I think we can live with that, right? Therefore, I can get rid of this. Cool. That's not bad, right? Will that work okay? And in Menlo Park, huh? How far from the BBC were you? I used to love going to the BBC. They had a scar thing in the little like coat room under the stairs. There we go. Cool. I think I can control the ECB now, volume, which is nice. But I know that area quite well. Yeah, Menlo Park for sure. Old stomping grounds for sure. The little bookstore right there next to the BBC. It was all right. The British Bankers Club. Not far from the Caltrain station. And if you know the pasta place next to the Caltrain station and next to the British Bankers Club, there's a little restaurant there, and I used to get something like the Testarossa pasta, which was spicy, but you'd have to pre-order like the lava cake or something. So you'd get there and you have to remember, you have to order the lava cake first. So you'd order the lava cake first. And then you'd get the Testarossa pasta. Pasta della Testarossa, something like that. Man, it was good. So I don't know if you know those places, Kando. All right, we're about 2.5 minutes, so they popped this early on us. Oh, you're closer to Palo Alto then, huh? You're up that way a little more. Yeah. Of course I know. Yeah, of course I know Palo. You're the next station basically. Yeah, the Stanford station. Yeah, that was less of a finance area, more of a VC area. Yeah, oil kicked off the M1. Let me zip over there quickly. Oil kicked off the M1. And I have 2 trade plans developed for the next move. Plan A, and Plan B. I can label them. Okay. So the first move has already occurred, and then we need the up, the down. Okay. Yeah, so I know you're stomping ground, Kondo. Are you still in that area? Next time I'm there, maybe I'll look you up. Most of my friends have made their bajillions and have all left the Bay Area. Incredibly wealthy. But that's where they all made their money. Boy, I used to go, like Palo Alto, man. I used to hang out on University Avenue a lot. Yeah. And Bama. Yeah. No, Bama's nice, but it's like, it's an uncut gem, isn't it? You really, really have to convince people to go there. No, it's nice. You got to see it. No, I could never live in Alabama. But then you get there and you're like, it's beautiful. There's parts of Alabama that are beautiful. And northern Alabama is nothing like southern Alabama, right? Ni hao. Doing good, comms. Yeah. Oh, Huntsville. I know Huntsville. Yeah. Friend of mine, his son is studying rocketry at the University of Alabama, Huntsville. Rocket Town. Yeah, man. Yeah, dollar bill. We should probably, I go through that way from time to time. Where do you get the dot plots? Well, I have a service that does that for you. I just had it open. So quantbox.co does all that for you. But do I have it here? Download history. No, I just closed the window like this morning. I mean, because I obviously I read everything yesterday.
Good afternoon and welcome to our.
It's here. I'll get it for you while we listen.
And Vice President Luis de Guindos. My name is Wolfgang Preußel. I also welcome the participants that are online. If you take your questions, please turn on your cameras and your microphone. And with that, I would like to hand over to President Lagarde, please.
Thank you very much, Wolfgang. And I'm going to preface the reading of the monetary policy statement with asking for your indulgence. I'm in COVID recovery mode. I would not have wanted to miss this last press conference of the year with you, nor did I want to miss the Governing Council meeting of yesterday and today. But it may come a point where I start coughing my life out. And at that point, my Vice President, dear Luis, has agreed that he will just take over. As simple as that. But I'm not contagious, rest assured. It's just acute bronchitis. So, good afternoon. The Vice President and I welcome all of you to our press conference. The Governing Council today decided to keep the three key
That's the dot
interest
plot.
rates unchanged. While inflation has dropped in recent months, it is likely to pick up again temporarily in the near term. According to the latest Eurosystem staff projections for the euro area, inflation is expected to decline gradually over the course of next year before approaching our 2% target in 2025. Overall, staff expects headline inflation to average 5.4% in 23, 2.7% in 24, 2.1% in 25, and 1.9% in 26. Compared with the September staff projections, this amounts to
So,
a downward
Sakala,
revision
this is
for
what you need to look
23,
at.
and especially for 24. Underlying inflation has eased further, but domestic price
Right there.
pressures remain elevated, primarily owing to strong growth in unit labor costs. Eurosystem staff expect inflation excluding energy and food to average 5% in 23,
There you go.
2.7% in 24.
So I did all of this
2.3%
yesterday
in
afternoon.
25 and 2.1% in 26. Our past interest rate increases continue to be transmitted forcefully to the economy. Tighter financing conditions are dampening demand, and this is helping to push down inflation. Eurosystem staff expect economic growth to remain subdued in the near term. Beyond that, the economy is expected to recover because of rising real income, as people benefit from falling inflation and growing wages, and improving foreign demand. Eurosystem staff therefore see growth picking up from an average of 0.6% for 23 to 0.8% for 24 and to 1.5% for both 25 and 26.
EuroCAD.
We are determined to ensure that inflation returns to our 2% medium-term target in a timely manner. Based on our current assessment, we consider that the key ECB interest rates are at levels that, maintained for a sufficiently long duration, will make a substantial contribution to this goal. Our future decisions will ensure that our policy rates will be set at sufficiently
I'll move my
restrictive
stop to break
levels
even on Euro Aussie.
as long as necessary. We will continue to follow a data-dependent approach to determining the appropriate level and duration of restriction. In particular, our interest rate decisions will be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. The key ECB interest rates
Well, I've always wanted to visit
our
Taiwan.
primary tool for setting the monetary policy stance.
Comms is out in
We
Taiwan.
also decided today to advance the normalization of the Eurosystem's balance sheet. The Governing Council intends to continue to reinvest in full the principal payments from maturing securities purchased under the Pandemic Emergency Purchase Programme during the first half of 2024. Over the second half of the year, it intends to reduce the PEP portfolio by 7.5 billion euros per month on average. The Governing Council intends to discontinue reinvestment under the PEP at the end of 2024. The decisions taken today are set out in a press release available on our website.
And by the way, I'll reiterate, if anyone wants me to come out and visit them anywhere in the world, all you need to do is put a group together that can cover my costs. I need to fly there, I need to stay there, and I need to eat, right? But that's it. That's it. If you can get 25 people together, it's enough. Now, when I visited South Africa, it was like 300 people. So we were able to do it for quite affordable prices. But it could be a small group. Which reminds me, I might be speaking at the London School of Economics this spring. maybe we do something there if you want to be in London.
Services activity is also set to soften in the coming months. This is due to spillovers from weaker industrial activity, fading effects from the reopening of the economy.
Kendo, if he doesn't know how to use MT4, he should take the MT4 course. If he still doesn't know how to do it, he should go to YouTube and say, how do I install this on my chart?
The rate stood at 6.5% in October, and employment grew by 0.2%
not a problem.
the third quarter.
I've been to Germany. Germany's
At
beautiful.
the same time,
Let's do
the
it.
weaker economy is
Email me,
dampening the demand for workers,
wayne@fxbootcamp.com.
with firms advertising fewer vacancies in recent months. Moreover, even though more people are in work, the total number of hours worked edged down by 0.1% in the third quarter. As the energy crisis fades, governments should continue to roll back the related support measures. This is essential to avoid driving up medium-term inflationary pressures, which would otherwise call for even tighter monetary
But I'll go
policy.
anywhere in the world.
Fiscal policies should be designed to make our economy more productive and to gradually bring down high public debt. Structural reforms and investments to enhance the euro area's supply capacity, which would be supported by the full implementation of the Next Generation EU programme, can help reduce price pressures in the medium term while supporting the green and digital transitions. To that end, it is important to swiftly agree on the reform of the EU's economic governance framework. Moreover, it is imperative that progress towards Capital Markets Union and the completion of the Banking Union be accelerated. So let's look at inflation. Inflation dropped over the past 2 months, falling to an annual rate of 2.4% in November, according to Eurostat flash release. This decline was broad-based. Energy price inflation fell further, and food price inflation also came down, despite remaining relatively high overall.
Where's my trade?
This month, December, inflation is likely to pick up on account of an upward base effect for the cost of energy.
Where's my trade?
In 2024, we expect inflation to decline more slowly, because of further upward base effects.
I did it just to
and the
measure,
phasing out
but
of past fiscal measures.
I didn't move my stop down there, did I? Oh, I locked in 750 pips. Oh, no.
Inflation excluding energy and food dropped by almost a full percentage point over the past
Man, it's hard to
2
coach and
months.
trade. All right, so anyways, I got knocked out. 750 pips profit.
This reflects improving supply conditions,
Ah,
fading effects of the past energy shock,
shoot.
and the impact of tighter monetary policy on demand.
Oh, yeah,
pricing
thank you.
power of
Yeah.
funds.
Oh, that's still great.
The inflation rates for goods and services fell respectively to 2.9%
Phone.
and 4%.
Anyways, fudge.
All measures of underlying inflation declined in October, but domestic price pressures remained elevated, chiefly because of strong wage growth, together with falling productivity. Measures of longer-term inflation expectations mostly stand around 2%, with some market-based indicators of inflation compensation declining from elevated levels. So what's our risk assessment? The risks to economic growth
That happens, Johnny Dollar.
remain
Yeah.
tilted to the downside. Growth could be lower if the effects of monetary policy turn out stronger than expected. A weaker world economy or a further slowdown in global trade would also weigh on euro area growth. Russia's unjustified war against Ukraine and the tragic conflict in the Middle East are key sources of geopolitical risk. This may result in firms and households becoming less confident about the future. Growth could be higher if rising real incomes raise spending by more than anticipated, or the world economy grows more strongly than expected.
We still have a half an hour until the
Upside
stock
risks
market
to
opens.
inflation include the heightened
I'm buying some
geopolitical
assets
tensions,
today.
which could
I
raise
think-
energy prices in
I
the
think
near term.
the council invested,
Extreme weather events
what was it,
drive up food
$9,500 last night?
Inflation could also turn out higher than anticipated if inflation expectations were to move above our target, or if wages or profit margins increased.
Oh
by
yeah,
more than
Isaac,
expected.
I mean, the easiest thing is just email
By
me.
contrast, inflation may surprise on the downside.
Wayne at
if monetary
fxbootcamp.com.
policy dampens demand by more than expected of the economic environment in the rest of the world, and in the rest of the world worsens unexpectedly, potentially owing in part to the recent rise in geopolitical risks.
Let me know what you're thinking.
So let's now turn to the financial and monetary conditions. Market interest rates have fallen markedly since our last meeting and lie below the rates embedded sorry,
Germ spreader.
I'll start again. Market interest rates have fallen markedly since
I mean,
our
why do
last
we do
meeting
this nonsense? We already
and
read
lie
it.
below the rates embedded in the staff projections.
Just go straight to the Q&A.
Our restrictive monetary policy continues to transmit strongly into broader financing conditions. Lending rates
So yeah,
rose
guys,
again in October
$9,500 of my
for
money was
business
put
loans
into
and
the
3.9%
markets
for
at the
mortgages.
market open today. Thank you to the
Higher
council's
borrowing rates,
lively
subdued loan demand,
discussions. I
and tighter
appreciate
loan
that.
supply have further weakened credit dynamics. Loan to firms declined at an annual rate of 0.3% in October, and loans to households also remained subdued, growing at an annual rate of 0.6%. With weaker lending and the reduction in the Eurosystem balance sheet, broad money, as measured by M3, has continued to contract. In October, it fell at an annual rate
Oh, I
of
love
1%.
peso, man. I'm a huge
In line with
fan
our
of
monetary
peso.
policy strategy, the Governing Council thoroughly assessed the links between monetary policy
Look,
and financial stability.
I've planned out the
Euro
entire
area
year
banks
already.
have demonstrated their resilience. They have high capital ratios and have become significantly more profitable.
I
over
mean,
the
it's all
past year.
planned out.
But the financial stability outlook remains fragile.
You start
in the
selling
current
at the
environment of
33%
tightening
retracement,
financing
not their
conditions
382. I don't believe in
growth.
Fibonacci.
and geopolitical
This
tensions.
is Wayne and Nachi.
In particular, the situation could
Sell at the
worsen
at the
if banks'
33.
funding costs were to increase by more than expected,
Okay.
and if more borrowers
And we
were
take
to
it down to
struggle repay
14.
their loans. At the same time, the overall
Okay.
impact
When
of
we
such a
were way up
scenario
here-
on the economy should be contained if financial markets react in an orderly fashion.
Does anyone remember my target when we were here at 25?
Against the buildup of financial
I said down
vulnerabilities,
to what?
and the measures in place contribute to preserving the financial system's resilience.
What was the target when we were selling up here?
So, in conclusion, the Governing Council today decided to keep the three key ECB interest rates unchanged. We are determined to ensure that inflation returns to our 2% medium-term target in a timely manner. Based on our current assessment, we consider that rates are at levels that, maintained for a sufficiently long duration, will make a substantial contribution to the timely return of inflation to our target. Our future decisions will ensure that the key ECB interest rates will be set at sufficiently restrictive levels for as long as necessary to ensure such a timely return.
8.
We will continue to follow a data-dependent approach to determining the appropriate level and duration of restrictions.
This move only gets us down to
The Governing
14.
Council intends to reduce the PEP portfolio over the second half of 2024 and to discontinue its reinvestment under the PEP at the end of 24. In any case, we stand ready to adjust all of our instruments within our mandate to ensure that inflation returns to our medium-term target and to preserve the smooth functioning of monetary policy transmission.
So maybe it becomes a little lower,
Now
actually.
ready to take your questions.
Might actually go a little lower
Thank you,
first.
President Lagarde. And the first question goes to Annette Weisbach of CNBC. Annette, please.
Wait.
Then we go down to 10.
Is in order.
I have obviously two questions. The first one is on the market expectations about the future rate trajectory, especially after the Fed yesterday was quite explicit about the potential of 3 rate cuts during the course of next year. So what's the ECB's thinking? And then the second is on the PEP. Is the PEP a prerequisite, or the earlier stop of reinvestments or fading out of reinvestments, is that a prerequisite for having rate cuts? And does that make them also likely to start in March? Thank you.
Thank you very much for your two questions. But let me remind you one thing. We are data dependent. We are not time dependent. We are data dependent. And let me take you into the Governing Council room.
Look at that, huh? Wow.
As you remember, we have defined the 3 key criteria of our monetary policy stance, namely inflation outlook, underlying inflation, transmission, strength of the transmission of our monetary policy. And it is against those 3 criteria that we determine whether enough progress has been made and whether our monetary policy is working. And clearly, when we look at our inflation outlook, look at the projections produced by staff and the entire Eurosystem on the occasion of the December meeting, our new projections see inflation at 2.1% in 2025, not 2026, which is included, but 2025 we see headline at 2.1, and the path to get there is flatter than it was before.
Well, revelations, I sold the
lower
Mexican
risk of
peso,
inflation expectations, risk
made
of
a
anchoring.
1,000%
Inflation outlook. On underlying inflation,
return
I
on
would say
investment,
quite specifically in the
and made no
policy
pips.
statement that a lot of indicators are
That's how long
showing
I sat
that
on it. I think I was
underlying
short for
inflation
11 months or
comes,
something like that.
below expectation, with a decline across all components. And when we look at transmission, we are clearly seeing a strong transmission to the financing of the economy, and strong transmission at large, particularly if we look at the volume of loans to both corporates and households. So, should we lower our guard? We ask ourselves that question. No, we should absolutely not lower our guard, and I'll give you 2 good reasons for that. The first one is that our inflation outlook, which is one of the 3 criteria, is conditioned on the interest rate path
Yeah, it was very, very high.
that was embedded in market data at the time when our cutoff date.
Oh, there's times when the trade crosses. I don't hate them all the
Cutoff date, as you
time.
will see in the publication, was
But when the
November
dollar
23rd.
is jammed,
So that's point number
then
1.
you roll
Point
over to
number 2,
euro,
when we
to
look
cross
at
bears.
all the measurements
I'll show you why.
of
Let me go
underlying
back.
inflations, there is one particular measurement which is hardly budging. It's declining a little bit, but not much. And that is domestic inflation. And domestic inflation is largely predicated by wage. So we need more data. We need to understand better what happens there. And why is domestic inflation resisting?
Down, 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 up, up.
We need a category of things. Number one, we need wage data.
Sell.
And that is going to be
I had my stop above this.
Really, as wide.
And now my stop's at break even. Because we have a new candle, and now basically it should be just above that.
Plenty of them. And that, of course, determines how tight is the market, and therefore how wage will behave in the next.
So here's the idea.
And when we look at the data that we have now, it is not declining. Compensation per employee has declined.
Morning, Jojo.
Q2, that's true. But the other indicators, no. So we need to have a lot more data in that regard. And the second element, which is critical, given the way we have constructed
notice that
the way staff has
this is our projected high for the year, by the way. We knew this in January.
Profit unit as well. Because our projection is predicated on the assumption that a lot of the catch-up wage growth will actually be absorbed.
So if this stays bearish,
enterprises and corporates,
you're going to do this, this,
demonstrating that
and we get down
domestic inflation too,
we'll just say 147.
is going to head down towards our target. We don't have that yet. We will have a lot more data in the course of 24.
And we'll do that in the first 6 months.
Particularly rich in the first half, but
so I'm short at 165
in order to determine whether it is actually sustainable or not. Now you had a second question which had to do with PEP.
So I'm going for just less than 2,000 pips.
Decision that we made on PEP, and that was shared by a very, very large majority of the governors. Everybody was fine with stopping the reinvestment at the end of 24.
No, they do not,
Some would
Sakala.
have liked a slightly different tapering, starting a little earlier.
Well, they do and they don't.
Later.
Look, I'll show you. You want to see
we ended up with that.
who wants to see the
100%
ECB
reimbursement
secret
until the
dot
end of
plot?
June, 50% reinvestment from July until the end of December, no reinvestment from January onwards. This is really balance sheet normalization. It's a good moment to do that.
I'm the only one
fragmentation.
that has access to the
Markets have
secret dot
absorbed
plot.
our decline in APP reinvestment as we had done it in a very similar fashion. So we think that it's really it's really on a standalone basis, and it will continue to operate on the
No,
back
nobody
burner, if you
cares?
will,
Okay, I won't show you.
without, we hope, being significant. And that's how we came to that decision. But it's totally unrelated to, if they do that with PEP, then maybe they're planning on this on rates. No. Rates are the primary tool, and we're going to use that independently of what happens on the PEP side.
Yeah?
As I said,
Two
it's on the
people?
back burner.
Not enough.
Thank you, President Lagarde. And the next question goes to Balazs Korani of Reuters. Balazs, please.
Good afternoon. Thanks for taking my questions. First question relates to the discussion. Last night, Jay Powell said that in their discussion, rate cuts have started to come into view, and we're definitely a part of the discussion. The question I have is the same true for the ECB? Was there any discussion from anybody about rate cuts at some point and how it could be done? The second question is...
right on, Revelations.
A few weeks ago, you said you don't expect rate change for a couple of quarters ahead. Today, do you maintain that view, or do you think data since then has evolved to a point where you would no longer keep that view?
Thank you very much for your two questions. On the first one, it's very easy. We did not.
This is the future levels of interest rates, according to the ECB, future levels of inflation. Notice out to 2025.
Between hike and cut.
And this is their dot plot.
Whole plateau, whole beach of hold. You know, it's like...
And this is a comparative analysis of all the central banks around the world.
Don't go from solid to gas without going.
This is pulled from the ECB. It's not guesses. This is the ECB's guesses, not mine.
I think going forward,
here's the American dot plot.
We are going to continue to be data.
Good to know, right? Here's American projections.
To determine meeting by meeting what we see on a totality of data.
Here's the Bank of England.
But obviously, given the
you got to know this stuff, bro.
Resistance of domestic inflation, and the risk of second round effect that we absolutely
There's
want.
2025. Wait, you don't know
to that category
what the Bank of England thinks 2025 is going to be like? How do you trade? You don't know this stuff? Well, it's $80 a month. I mean, it's out of the reach of mere mortals.
Good afternoon. I have to come back to the rate outlook. You mentioned that a lot of data will arrive in the course of the first half on how wages and inflation will develop, and by coincidence, PEP reinvestments will also slow right around that time. So I would be interested in your view on whether that seems like a reasonable point in time to change your view on what kind of policy path for interest rates is needed, and whether that would be a good moment to consider rate cuts. And the second question I have is on something you mentioned in your introductory statement. You said governments should rein in fiscal support, or otherwise monetary policy might need to be tighter. Do you have any particular country in mind with that? Thank you.
On your latter question, we don't have any particular country in mind. I think we have the principle in mind that the fiscal support, particularly the discretionary support,
it's a free country,
to compensate for the high prices of energy, that should absolutely be withdrawn. When you look at how fast the price of energy has gone down, both on the oil and gas front, it's just totally unjustified.
Huntsville!
Totally unjustifiable to continue.
Remember when I took my son there, we stayed at the Marriott.
But no particular...
in the morning, we opened the curtains, and all the rockets were right there. I got the best room in the hotel, which is...
We strongly encourage the reduction of...
It's not a lot of great hotels in Huntsville.
Of the sovereign debt,
but we were right staring at the rockets as the sun was coming up in the morning. I'm like, yeah! Oh, man. Nothing like rockets in the morning.
Anyway, we make the point that fiscal measures must be rolled back, that sovereign debt must be reduced, and we make another point, which, as you will...
both my kids did rocket camp, space camp. Both of them did space camp, not at the same time either. So I've been there. I've done that. It's cool.
We perceive and we fear a level of procrastination in reaching agreement, in closing.
I've had lunch under the space shuttle,
files which have been pending for way too long, and which would be critical in order to support.
Man, I always wanted to do stuff like that when I was a kid, but when you grow up poor, you just don't get to go to space camp. What can I tell you?
That competitiveness is really weakening, and whether it's capital market union, whether it's banking union, or the whole market union. And
CAD is struggling, right, Piggy?
Needs to be made, and that point was made very clearly. The Vice President is a very strong supporter of that, and there were many voices on the Governing Council to say, in the presence of Valdis Dombrovskis, who is working on those issues, that it has to happen. On your first question, it is true that we will receive a lot of data in the first half of 24. So it will be data rich, particularly
On hell,
on
it
the
doesn't make any
employment
sense to
front.
me.
Just consider
But yen
that
is
there are
strong.
about 50% of the employees that we cover under our wage tracker.
Remember, the carry
who
trade,
will
because
see
of the
their
Fed
collective
cuts,
bargaining agreement,
is
collective
dying.
agreement, renegotiated.
So yen is strong. People are
New
getting out of the
terms
carries.
of employment and possibly new wages will be.
You don't have much of a carry trade if
in
all the
same
central
vein,
banks are getting
in the
ready to
corporate
cut.
world, whether it's for goods or services, terms and conditions, price lists are often revised also in the first few months of any.
Look at that.
calendar year.
Random.
But it's not to say that this will be it.
Random.
We will remain attentive to a whole host of data that will come in the course of 24. Thank you.
The next question goes to Martin Arnold of the Financial
Oh, yeah,
Times.
but that's inside the building. Yeah, that's nice.
Thank you very much. I have two questions.
But we ate under the space shuttle outside.
Firstly, if I could just ask you about comments that Fed Chair Jay Powell made yesterday evening. He said that there was the risk that they would hang on too long with rates at the current level. And he said they were very focused on not making that mistake of holding on too long at a high level. Do you share that concern?
Well, I'm an
Secondly,
economist,
if I
so
could
you draw graphs
ask about
over and over and over.
market expectations, and market
So-
pricing
Thank you.
in a slightly different way. Do you think that the current market pricing, which is for the ECB to cut rates,
Right. I think you're right,
6
Denise.
times
They
next
probably
year,
even talked to them.
starting from March,
It's
is that
magic, too, that we hit
reasonable? Does that seem fair?
150 on the USD yen, and that was the top.
Thank you, Martin. On your first question, who wants to hang on for too long?
And the Bank of Japan has a history of doing that,
But
price
equally,
targeting.
What we are saying today on the basis of the forecast that we have produced by the Eurosystem staff, we don't think that it's time to lower our guard. And we believe that there is still work to be done, and that can very much take the form of holding. And I think in our monetary policy statement, we refer specifically to sentences that they don't have a particular magical virtue, but now of course I find the fiscal comment that I wanted to refer to. So essentially what we say, and we have said that before, and we are repeating that same sentence, we say, based on our current assessment, we consider that the key ECB interest rates
Remember,
are
red
at
means
level
no
that,
longer up.
maintained for a sufficiently long duration,
It's been on the
will
chart
make
for
a substantial
all week.
contribution to our goal. And we continue with
USD
our future
kitty cat
decisions will ensure that our
inverse
policy rate will be set
situation.
at a sufficiently restrictive level for as long as necessary. If you combine that with our data dependency and the fact that we are not, narrowing the focus, or the focal of what we look at, but we know that some data and a combination of data and the mechanics between these two, wages and profit in particular, are going to play a significant role, and we will be particularly attentive to those. But there will be, more data coming in. We will have another bank lending survey. We will have, a corporate telephone survey coming in. We will take that into account to determine, when we can lower the guard, for sure. But that's where we are at the moment. Now, your second question, of course, I'm not going to address it directly. I will simply say that
Isn't it funny?
we will be...
It's labeled and
looking at
everything.
our three criteria. We will be identifying whether, on the basis of staff forecast, on the basis of our measurements of underlying inflation, on the basis of our strong transmission of monetary policy, we are at this medium-term target that we have set for ourselves of reaching the 2% target at the end of our projection. We are probably a little bit more severe with ourselves, because the end of our projection, or the end of the projection horizon, would take us to 2026, where we have 1.9. We are going to probably look very carefully at the end of 25.
See, what she's talking about, I have in QuantBox.
And we arrive on a more sort of...
This is what she's talking about. People who get lost in the data and they don't know. Look, there it is.
And, you know,
This is what exactly what she's talking about. I got it plotted with beautiful colors. Look at
projections that we have now is conditioned on the interest rate path that was embedded in market data before the cutoff date. That cutoff date was November 25th.
I mean, good to know, bro.
President Lagarde. And the next question goes to Isabella Bufacchi of Field Sold Event. So, Isabella, please.
Thank you. Good afternoon.
It's cool to hear her talking about it, and people are scrambling through their paper. Really? You have projections out to the end of 2025?
I've seen the projections with growth picking up. But how much the risk of recession, of things getting worse, comes into your decisions today and on interest
Well, I
rates?
appreciate that, picky,
And then
picky, oink,
on
oink.
PEP,
But
I have a
what's
question.
happening is I'm pulling it out of the ECB.
That flexibility impact.
She's reading her data. I'm giving you her data. And nobody else knows. Nobody else except very smart money knows these things.
Sounds big news that fragmentation.
Look, if you don't have the
is
right
not
tools,
word.
you're just lagging
Can
behind.
you say
There's
a
no
bit more
excuse.
about this? Thank you.
There's absolutely no excuse in this world. If you don't have the right tools, you're just lagging behind.
First of all, let me say that we do not have a recession in our baseline.
$80 a
Now,
month,
of course,
mogul.
I'm not looking at specific countries. I'm looking, and we are looking collectively at the euro area at large. Our mandate is not.
And that's for the full pro subscription.
Our mandate is to reach the medium-term target of 2%, which we've defined as price stability. And to do that, we know that we're going to have to continue with financing that will be triggered by the interest rates that we set. That financing will necessarily dampen.
Well, the stock
demand.
market's going to open, so I got to go, baby. I got orders in the market. 9,500, I think, $9,500 going into the market this morning. Thank you to the council.
By delivering on our mandate. So on BEP, first of all, don't forget that as long as we read.
So thank you to the Council of Investment Advisors. They invested quite a bit in the bond market. They invested quite a bit into the S&P 500. Mostly the S&P 500, wasn't it? Yeah, a little NASI, I think. Didn't we bump up some of the NASI stuff? But anyways, we added $9,500 in the account. I'm going to probably put I don't know, I might put another $7,500 into it today or tomorrow, so that we can start buying some new stuff if there's opportunities, all that kind of neat. So anyways, thank you to the CIA, the Council of Investment Advisors. Yesterday was a 10-hour meeting, but it was so good. I was so thrilled, right? So JGB, we go over to, well, the video should be there. It should be there. But we need to meet, right? You have a few questions. I'm happy to do that. Yeah, I have some time. I'm going to go outside with a laptop and all that kind of stuff. But if you anyone in the CIA, if you have some follow-up questions because you've been contemplating all night, that's really cool. Why don't we meet up very quickly, like in about 15 minutes? Why don't we meet in the CIA room at Investor Bootcamp? And we can just kind of chat. If you don't mind me slurping on coffee and smoking a cigar. Okay. Oh, yeah. Are you saying it's just a quick one? Yeah, sure. But you mean we need to meet in 5 minutes, or 15 minutes from now is okay? You're like, oh, they have 15 minutes. No. And I'm like, let's start in 15 minutes. No. But anyways, I'll open it up as soon as possible. I just got, I got to, this money's going in 90 seconds. And then I got to do a couple things, and then I'll get there. And I'm just preparing for a meeting that I have at 10:30, but I'll give you as much time as we need. Whew. Yeah. What a world. What a life. I'm in love with what we're doing. Thank you for being part of the Forex.Today community. Oh man, now my front door is ringing. Shut the... So anyways, lots going on. We're making the world a better place. I like you. I like being in the world with you. As I mentioned before, if you're somewhere outside of Atlanta, which means if you're somewhere on this planet, and you're like, Wayne, I got a crew of a few people that want to get together and talk Forex, do some training, do something. We want to do something, and we want you to be here with us, but we're in Timbuktu. Well, let's talk about it. Okay? Yeah, let's talk about it. Maybe I'll put a goal on the calendar for 2024. Maybe I should put a million miles on my travel account. I don't know. Like I'm wide open. I don't have time to waste, but with proper planning, we can do anything. Okay. So, anyways, let me know. Wayne at fxbootcamp.com. Boom. Peace on earth. May the pips be with you.